Good evening. Today we are taking into accounting equation and accounting principles. Accounting equation is an equation that was followed in accountancy subject. Accounting equation is by taking assets and liabilities, we can find out this accounting equation. Primarily, assets is equal to liabilities. And liabilities can also be divided into two types: outside liabilities and capital. Outside liabilities and capital. So thereby the equation is assets is equal to outside liabilities plus capital. When you know two items, when you don't know the third item, you have to deduct the second item, that is from the first item. That is, for example, if you know the value of assets and if you know the value of capital, you don't know the value of outside liabilities, then outside liabilities is equal to assets minus capital. In the same way, when you don't know the capital amount, assets minus outside liabilities will give you the capital amount. This is very, very important at any stage, whether you may be in intermediate standard or 10+2 standard, degree or PG, whatever it may be the course. This accounting information you must get thoroughly. You must keep that in your memory. Now we are going for accounting principles. As a science, accounting will have some principles with it, and those principles must be followed by every person. All over the world, at every nook and corner, whomever they are concerned with this commerce and accountancy, whether it may be students or whether it may be business people or anyone, they must know perfectly the accounting principles. If they don't know the accounting principles, it is mere waste to go for accounting procedure and do the accounting work. Compulsory accounting principles must be known. Accounting principles are two in number. One is accounting concepts, the second one is accounting conventions. So what is accounting concepts? These are nothing but the rules and regulations that must be followed by every person. That is nothing but accounting concepts. Accounting conventions, these are nothing but the guidelines to the accountant to do the work in a perfect manner, in a good manner. So accounting concepts are 10 in number, and accounting conventions are 4 in number. Total 14. These are the 14 principles of accounting. When we go for accounting concepts, we can compare these accounting concepts with 10 commandments given by Jesus to Moses. They must be known perfectly. If not, they must know the names, thereby they can able to understand the concepts. And the 10 concepts are as follows. First one is business entity concept. Second one is money measurement concept. Third one is going concern concept. Fourth one is cost concept. And fifth one is accounting period concept. Sixth one is matching concept. And seventh one is accrual concept. Eighth one is dual aspect concept, or it is also known as accounting equation concept, or it is known as balance sheet concept. And ninth one is realization concept, and 10th one is object evidence concept. Like this, there are 10 concepts that we come across. These are just like 10 commandments given by Jesus to Moses. I told you already. And every accountant, they must know the rules and regulations of these concepts, what they tell. Now, first one, business entity concept. Business entity concept, in that concept, you must identify the business as a separate person, like how you are. Unless otherwise you won't identify the business as a separate person, you cannot be in a position to do the business perfectly and smoothly. So you have to consider that business is a separate person. This means whenever you want to take any money, you must be in a position to return back to the business. Okay, so like that, you must consider the business as a separate person from you. You should not say that I am the business and my business is I am. they are not one and the same, they are entirely different. Then only you will come to understand about the business and the fruits of the business. That is about the business entity concept. The second concept is money measurement concept. What is money measurement concept? When you are doing a business, you have to measure the transactions in terms of money, but not in any other measurement. Like distance, you are measuring in kilometers and meters. Liquids, you are measuring in liters and milliliters. Time in hours, minutes and seconds. In the same way, all the business transactions must be measured in terms of money only. Then only you can able to understand what happened and what is not happening. This is about money measurement concept. Now coming to the third concept, going concern concept. You should not utter the word, my business had gone. When you say that your business had gone, people, they don't rely you, they don't believe you. You must always tell that my business is going on. But you should not tell that my business had gone. If you don't do that, okay, your business will not stay for a long period of time. So you have to tell that my business is going on. Even though it is running in losses, you have to tell that my business is good and it is going on. This is about going concern concept. And the fourth one is cost concept. And here I want to tell you about the difference between cost and price. In ordinary man's language, both are one and the same. That is, cost and price, they are one and the same. But there is a further type difference between cost and price. Price is the value of the commodity, whereas cost is nothing but the total expenditure incurred to manufacture the commodity. That is cost. The difference between price and cost will give you the profit amount or the loss amount. If price is more than cost, then the difference is nothing but profit. Otherwise, the difference is nothing but loss. So every businessman, they must go for the cost, but not the price. When you know the cost, you can make gymnastics. You can do gymnastics. You can give at cost price. You can give at lesser than cost price. You can give at more than cost price. That is greater than cost price. So every businessman, they must know the cost and they should not reveal the cost. For example, if you go to a shop and if you ask a commodity, he will give you about the price of the commodity but not the cost. He won't reveal the cost. Because when he reveals the cost, you can be in a position to understand what is the profit that he is gaining, that he is getting. So no businessman will expose the cost, at what cost he got the commodity. So every accountant, they must look after the cost but not the price. Okay, now fourth one is over. Now fifth one, accounting period concept. Every businessman, every business accountant, what do you mean by accountant? And a person who writes accounts, who deals with accounts, we will call him as an accountant. Every businessman and every accountant, they have to keep a period of time, and after that period of time they have to close the books, and that period we'll call that thing as accounting period, and it will have 12 months period, that is 1 year. No accountant should keep their books open for 15 months, because if he keep for 15 months, he cannot be in a position to know the true profit amount as well as loss amount. So the accounting period he has to follow, and it must be 12 months, that is 1 year. After 12 months, he has to close the books and he has to prepare the other statements in order to know the profit amount or loss amount as well as his financial position. So accounting period is also very, very important. And nowadays people, they are going for financial year, starting from 1st April of 1 year to 31st March of next year. Previously they used to follow the calendar year, that is from 1st January to 31st December, but it was not there. According to income tax authorities, okay, the financial year is the accounting period, that is starting from 1st April of 1 year to next 31st March. They are taking that thing as accounting period. And the gap between this April and March will come exactly 12 months. So after 12 months they have to close and they have to go for preparation of other accounts in order to get the profit amount or loss amount. That is about accounting period concept. Now, matching concept. Matching, one thing you have to keep in mind is matching concept will always must always go along with accounting period concept. Whatever may be the expenses and whatever may be the income that you come across in a business, you have to match with that period only. That is, you should not take them in next year or next period. Whether you come across expenses or whether you come across incomes, in which year they are coming, to that year only you have to take into account, that you have to match with that year only. You should not postpone that or take that in next year. This is about matching concept. And next one is accrual concept. Accrual concept is nothing but added concept. What is this? When you are ready to get something or when you are ready to pay something, you have to pay in that particular period of time. Otherwise, it will be added to the next year. That is nothing but accrual concept, added concept. Okay. Every businessman, they should not go for accrual concept. Some people, they'll say that, sir, some amounts we didn't get, still they're outstanding. But whatever it may be, the outside amounts, you have to add to that specified income or expenditure, whatever it may be the items. But you should not take them in the next year. So like that, you'll come across accrual concept. After accrual concept comes the dual aspect concept. This is also known as accounting equation concept or balance sheet concept. In this, the word itself, it tells us dual, two. That is, we have to take into account two items, very important items, that is assets and liabilities. And you should not give importance for one aspect and leave the other aspect. So you must give both the things some importance. That is, here accounting equation will be taken into account. Accounting equation is assets is equal to liabilities, as I already told you. And liabilities, they can also be divided into two types. That is outside liabilities and equity. That is capital amount. So, dual aspect, both the things you have to take into account and you have to give equal importance for both the things. That is dual aspect concept. Now, realization concept. The ninth one is realization. You have to see whether you can be in a position to realize yourself in the market or not. Okay, that means your assets, whatever it may be, the assets that you are having, they must be sold in the market. They must be realized in the market. Otherwise, you cannot be in a position to pay your outside liabilities. So, you must concentrate on this realization concept. And after that, you will have objective evidence concept. There should be an evidence. If you go to a court of law, the court people, they will ask whether there is any evidence. Whenever you come across any evidence, then only they will believe. Okay. In the same way, when you go for accounting, there must be some evidence. Unless otherwise there is no evidence, we cannot do anything. So, objective evidence concept is also very, very important. For example, if you come across any purchases, there should be a purchase receipt or quotation, whatever it may be, purchase voucher or purchase invoice. In the same way, when you are going to sell anything, there should be a sale receipt or sales invoice. Then only you can say that there is evidence for that. So these are the accounting concepts that we come across, and these are nothing but the 10 commandments to any accountant or any person who relates to commerce and accounts. And tomorrow I am going to tell you about the conventions or the guidelines. So thank you. If you come across any doubts, please ask me and give your comments, and don't forget to subscribe this. Thank you very much.